It's great to have you both here. John, what would your advice be to investors right now who might be thinking about how much further they need to divest from China exposure?
Get rid of it is the simple answer. Look, my old friend Ray is right in the sense that China is huge and you can't ignore it, and investors are going to have to deal with it over the next 10, 20, 50 years. But right now, they're going through a constriction, which is not like a strict parent. It's more of a mugging that's going on. A year from now, Xi Jinping will be appointed the leader again. The first time anyone has broken the time rules since Mao Zedong. He has seized total control. This is it's when you talk with the Chinese leader, the only word you hear in every paragraph of the conversation is stability. Stability means maintaining control. Xi needs control in order to do what he needs to do in a year. So this is going to get worse, and it's gone from education to gaming, and now they're controlling content on TV and content in films. So we're going to see more. What do I want to own there? Actually, nothing at the moment, but I especially don't want to own luxury goods in China, which has been a very popular theme. What are you going to own? Oh, you can own baby diapers, I guess. They certainly won't challenge you on that. But China is just a very, very hostile environment right now, coming straight from Xi Jinping on down.
Well, the whole luxury space is basically, I would think probably 40% of their sales must come from China or from Chinese buying elsewhere, if not more in many, many cases. So I'm talking about many of the big European names, some of the U.S. ones as well. So that's maybe a further area to explore, and an interesting warning there. Derek, I wanted to ask, we've been sort of looking at this from the lens of social transformation, you know, the idea to increase more children, to lower the cost of living, to make sure that society's gains are distributed fairly. Would you, though, also point to the economics as being a catalyst of some of these changes? You know, when we see them imploding skyscrapers, when we see the retail sales data coming in well shy because of COVID concerns, and there's a lot of discussion about what's going on with this property bubble, what's the connection there? Is there one?
Yeah, I wish there was an economic rationale. Certainly Macau doesn't fit into that. If you were proceeding according to what's important economically in China, Macau wouldn't crack the top 100 issues. So I think John's got it right. There are economic concerns, for example, that retail sales figure you just noted being so weak. But I think this is coming from Xi, and I think he's also right that the Party Congress, where Xi's trying to extend his rule, is fall of next year, which means we have to anticipate another year of this, that it's political, that the only way you link data concerns with tech companies to Macau gaming is that you're attacking other members of the Communist Party, what they do with their wealth, what they do with their consumption, gathering data on them, and so on. Obviously, that's not the way the Chinese are going to present it. But it's certainly not economic in its rationale. It doesn't seem to be prudential financial regulation or anything of the sort. It looks political, and it looks aimed at the rest of the party.
Derek, so, you know, John kind of hinted at what other areas could be at risk here. What would you say? And I know you've also talked before, sort of jokingly, but not joking, about, you know, the consumer goods makers who are making literally diapers or baby goods and household, like that those would be maybe the safer areas here. But what would you also say is probably likely at risk, whether it's because of a crackdown on fellow Communist Party members or on, you know, their style of living, what have you?
Well, at the core of a lot of this is non-bank finance, meaning it could be state-owned finance, but it's not through the state banks. It's other kinds of financial organizations. The Chinese are not going to wrap up the state banking system. You know, maybe some people will get arrested, but the state banking system is safe. Everyone else can be at risk. So if we find out, hey, you know, there's a lot of money being sent over to Macau so you can gamble, and you're doing it through this trust, you know, a non-bank financial, or you're speculating on IPOs through non-bank financials, or you're buying high-end consumer goods through non-bank financials, the element that links them all is financial activity on a large scale outside the state banking system. And so that's where I think there's a high risk before the Party Congress next year of a crackdown. And then for investors, they have to follow, like, well, who needs that money? You know, are we exposed to anyone who gets a lot of their financing outside of the state banking system, because those people could see their financing dry up?